Hi guys, welcome once again to Traders Motivation, and today's video is going to show you how to apply the Fibonacci Retracement tool to charts on the Oanda Fx Trade platform. Okay, in front of you now you've got the Euro JPY daily chart, and I'm going to show you first of all how to select the Fibonacci tool and then how to apply it to a chart in order to find good levels to trade from or towards. Okay. So yeah, we've got the daily chart in front of us, and to select the tool we go into the top right hand corner and we select the trend line button, and that gives us a few options, but the one we're going to look at today is the Fibonacci Retracement. Now if a chart is obviously in a downtrend, we select the high and we bring the tool down to the low. If a chart is on an uptrend, then we will select the low all the way to a high, and then we find levels that the price may retrace to. But we'll go into an uptrend application of the Fibonacci tool after I've shown you this one. So we've got the Euro JPY daily chart, and the high on this particular chart here, going back to April 27th of 2016. So we will click there on the high, and we will keep our fingers on the left mouse button, and we will just drag it all the way down to the low, which is down here, and release the button. I'll click again on the left button. Okay, so then that's applied so we've got the high and we've got the low, and then all these levels or dashed lines relate to different Fibonacci ratio numbers. So we've got the 618 down here, we've got the 382 and the 236. I know TradingView lets you customize which levels it shows, and I think that's a better graphical representation when using a Fibonacci retracement. But this purpose of this video is just to show you how to apply it on Oanda. I'm not sure whether you can amend the retracement ratios that it shows you on these particular charts. But as you can see, it doesn't really matter, because we've got the high, we've got the low, and then price has bounced around these particular levels there, look. So it's burst through, touched this level, tried to move above it, stopped, retraced. This one pushed through, closed above, but then came back down below, and then touched this level here. Price came back down, it's touched there, as you can see, price has touched it, tried to rise above it, closed below, retraced back down. Tested again, tested again, tested again, tested again, until it's made its way through. Price has stopped here, and then bust through again, touched the 382 level, retraced back down, powered through it, come back down, tested the level again, back up to the 236. So as you can see, it's very difficult to predict whether a price will power through and move to the next level. I wouldn't advise trading just Fibonacci levels on their own, but they are a very good guide as to when to look and when to make trading decisions when price does reach these levels. For example, around here, you could see that it's approaching this level, go down to a lower time frame, stick a trend line across here. When it breaks, obviously take a short trade. Price has come back up, you could put a trend line there. If price breaks, take a short trade. It wouldn't have broke in that particular scenario, it would have powered through, so you just don't take a trade. So price has gone all the way up here, it's broke through the 236, bounced around, and now it's come back down, and it's probably highly likely that it will come back down to the 382. Where it will go from the 382, in my opinion, as a retail trader, it's impossible to predict. But you can then study price action at these levels and decide whether you want to take a long trade back up here or take a short trade back down to this level or beyond. Okay, so that's how to apply the Fibonacci retracement tool to a chart that's in a particular downtrend. Admittedly, this is bouncing around a little bit and maybe not the best example. However, it just gives you an idea of how to apply it and levels where price is likely to retrace up to before then making a leg lower if the chart is in a downtrend. So we'll go to the USD JPY, and as you can see, this one's in a particular, in a fairly strong uptrend. So we select the Fibonacci retracement tool again. We find the low, which is this one here, left mouse click all the way up to the high and release. And there we go, that's applied our Fibonacci tool. So price has come up to this high and now it's retracing back down. Will it cut down to the 618? I would say yes, it is going to. We've got a very, very good demand zone down here. This is a live chart from the 17th of January 2017. So if anybody's watching this video around this date, you may want to look to making a trade at this level, either back up or wait for the break back down to the 0.5. So that's how to apply it in an uptrend. You go from the low to the high. In a downtrend, you go from the high to the low, and there are your retracement levels. Now you can apply the Fibonacci tool to smaller time periods or sections of time, for example. So around this area, at the time, that would have been the low, and then that would have been the high. So let's apply a Fibonacci retracement there. So we'll go from this low here up to this high here and release. Okay, so imagine this part of the chart doesn't exist and stop it right there. We'd apply the Fibonacci tool perhaps on this day here and make a trade, a short trade down to this level, which it will have touched, tried to break through, and then risen back up. Again, it came down to this level here, as you can see, bit of price action, smashed straight through, stopped on this level, bounced around between the 236 and the 382, eventually bouncing through, tried to push back through up to the 236 around here, eventually does break through, again stops at the 382. But so this is just giving you an example and just showing you that these levels, they are worth keeping a note of, and they are worth watching for breaks, watching for bounces. But again, just to reiterate, I wouldn't advise trading just purely on touches of these lines, because as you can see, this one's touched, consolidated, and then pushed right through it up to the next level. Could that have gone back down? Yes, quite easily. So I'd always advise adding a Fibonacci tool just for confluence when making trading decisions. If you're a trendline trader, let's apply a trend line to this particular section here. There you go. So price has come up to this level. Price will have just gone above the trend line there. Is that a good time to trade out of this particular Fibonacci level, 382? Yeah, it's broke the trend line. Perfect. Perfect trade. So you've got the confluence of the trend line, and you've got the confluence of the Fibonacci retracement, break of the trend line, break of the Fibonacci level of 382, take a long trade. Perfect. That's exactly how you need to approach trading. Confluence trading. Don't just rely on one tool. Don't just rely on a trend line break. Don't just rely on just a Fibonacci. Don't just rely on whatever indicators you're using in particular. Get a combination together. Fibonacci break, Fibonacci level break, trend line break is RSI over sold. 3 confluences, bang, long trade. Okay, I hope that's helped you there on how to apply the Fibonacci retracement tool, and maybe a few ideas on adding things to your trading strategy. If you've got any questions or you like this video, please leave with me a comment, please subscribe, and I'll have more videos coming shortly. Okay guys, have a great day and see you later.